We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Vermeulen, founder and chief market strategist at the Technical Traders. How are you today, Chris?
I'm great, Tom. How are you?
Great to have you back. And of course, we have a lot to talk about today. So last week, we had the FOMC meeting in which Powell announced the QE tapering schedule, and the S&P rallied into the end of last week. So is this a case of the market already pricing in this news? And at what point do you consider this being negative for the major stock indices?
Yeah, I think the market must have been pricing it in. I mean, we've seen a really strong run in the SP 500 and the NASDAQ in the last month, really. And then I think we finally got that news and people were really, really excited about it. I think a big chunk of the move up last year, or last week on that news was more or less, it wasn't anything that was shocking. So that gave some comfort. And also it was going to be a very strong close on the week for a weekly close of new highs. And I think a lot of people might have been going into that market or into the FOMC kind of shorting the market. And then they were holding out into the close on the end of the week. And I think just a lot of people who are hoping the market was going to crash kind of got stuck in a short squeeze. And last week was just a up and up and up and up type of week. And that kind of upward momentum, I think, really just created that wave of people covering shorts and then wanting to get long. And there was no surprise news there. So it just kind of created that comfort zone, I think.
So before we hit record here, you were telling me that the move into more risk on assets is kind of playing in here. So can you explain that to us again and explain this market behavior?
Yeah, sure. Well, let me pull up my chart and I'll show you exactly what I mean here. If we look at the SP 500 here, it's been going up all year. So money's been flowing into the large cap stocks all year, the big blue chips carrying all the weight, grinding higher. When we go and we look at the mid caps index, they really, early in the year, they just went into this sideways range and they just kind of traded sideways for most of the year. And just in the last couple of weeks, we saw money actually starting to rotate into the mid cap stocks. And mid cap stocks are a little bit more risky than the large caps. The smaller the company, the faster the price moves. And so that was a really good sign. This happened a couple of weeks ago. That is telling us, hey, money's getting a little more willing to put more money at risk, get into faster moving stocks. And so that was a really good sign to see. And then last week, we take a look at the Russell 2000, and the Russell 2000 literally broke out and blew past its highs for the year. And Russell has been trading sideways almost all year. And this is where the really speculative traders, high momentum stocks are kind of lying. And in 2020, we saw that really strong market push where all the sectors were popping and ripping to the upside. Well, this year we haven't had that. And the Russell and the mid caps is a really good snapshot of what those stocks have been doing, which is almost nothing. Most of those leading sectors of last year have been trading sideways or lower all year, and they're just coming back to life now. And so now we've got the large caps, the mid caps, and the small caps all participating in this rally. Transportation index is on fire as well. So this is really good sign that we're seeing more money pile into this market, and it's very committed. It's willing to take risk. And what's really interesting is, I think it was last week we saw gold and silver were down one day, fairly strong, yet the gold miners actually had a really strong rally to the upside, bucking that trend. And that was a day when the Russell, I think, was actually breaking out or rallying in that mode. And that's just telling us that the risk on money, people willing to jump into these high momentum stocks like gold miners, were willing to jump in even when gold and silver were getting hit. And that's a really good sign that we could see a big run going forward in this market. And if we look at the Russell 2000, I mean, we've had this very strong run, a big bull flag pattern, and it's just breaking out. The Russell's actually pointing to, well, it's already had a nice run in the past week, but it's probably got about another 25% rally to the upside. And for small cap stocks, that's probably like, 50, 60, 100% return in a lot of these smaller stocks. So there's a lot of potential going into the year end. End of January is when I think this cycle could come to an end, but it's exciting stuff.
So, Chris, what considerations do you think there are when we're looking at these particular indices that really marks the seasonal nature of going into the end of the year?
Yeah, I mean, usually November we start to see some type of bottom or start to see the market move higher. It's just there's this kind of belief that October's a tough month for the stock market, and September, October was a tough month this year. It was also almost identical of last year. We had a September, October pullback, and then once everybody gets in that kind of upward kind of slope, and we start to see price breaking out, making a series of higher highs and higher lows, it's the trend's in place. It's seasonality wise, people are in a good mood. They also want to get invested to try and make more money by the end of the year, try and hit their goals or pass their goals. It's just this kind of self-fulfilling prophecy, this kind of end of year holiday rally. And once that momentum starts, you can just see everyone start to pile in and drive the markets up. And hopefully this will carry through for quite a while, for another couple of months potentially.
Chris, I'd like to move on to talking about the dollar and how it affects basically the prices of the metal. So why does it have such an effect here like that?
Yeah, the dollar, I mean, surprisingly, most of the year we've seen the dollar either bottoming or moving higher, and it's put precious metals under pressure. But right now we're seeing the US dollar index trading at this 94.50 area. It's a very significant level that we saw late last year. And a couple times it hit this level. So we're at this major turning point for the US dollar. I think if the dollar gets rejected here and starts to collapse, that is going to be the big trigger, I think, to send precious metals and mining stocks to their next leg higher dramatically. I think that could be the start of gold to 2,600. I think we'll blow through the 2,000, 2,100 level on gold very quickly when that happens. Really, I think a lot of it, we're waiting to see if the dollar is going to break above 94.50 and hold up there, or if it's going to start breaking down below that 93 kind of 25 area. If it starts to break below this area, then that could be the start of a big rally. That'll be a rally for gold as the dollar falls. If the dollar breaks out, obviously we're going to see gold continue to consolidate and trade sideways. And the gold chart shows that really well. When we look at the gold chart here, especially if we just kind of zoom into this most recent time frame, the last 7-8 months here, there's a really clean level on this chart where price consolidated. It kind of had this huge gap through it. It's had previous highs, and we're just working our way back up there. And so there's still some work to be done for gold to get this breakout. And if the dollar does start to move higher, then we're going to see gold continue to base and probably pull back in this area. And it could take another month or two. I think precious metals have bottomed. I think miners have bottomed, but they actually still might take several months to break out of these bottoming formations that they have. They could struggle for a while. And I think they'll come to life maybe in a month or 2 months from now. I think they could become market leaders, but they still have some work to be done. Silver is in the same boat as gold, simply stuck under a resistance level, these previous highs here. And it could still struggle for a little while.
So as we see that $94.50 level for the dollar acting as resistance, is that about 1830 level for gold acting as resistance as well?
Yeah. So when we saw gold kind of top out, actually it was the same for silver as well, but we had a low in the US dollar, and then the US dollar ended up rallying, and then gold pulled back, and then the dollar kind of pulled back a bit, and we saw gold have this pop. But even though the dollar has actually been trading sideways for a few weeks, we're actually still seeing gold push a little bit higher. It's holding its value. And that's telling us that there's people starting to move into the precious metals sector. And that's one of the reasons why I think we're getting really close to a breakout in precious metals is precious metals are kind of pushing on the dollar, saying, hey, we're still going to go up even if you're not going anywhere or if you're going up. And we've seen that a few times now. And we're seeing gold miners start to come to life. When you look at like GDXJ, for example, I mean, we've seen some really nice momentum shift. We've gone from trending down to now we're above the key moving averages. We've got a higher high, we've got a higher low. And so we're starting to see that momentum shift. And that is kind of the sign that the dollar may be failing here and it might reverse down, because the leverage plays, gold miners, are kind of a leading indicator. They're telling us, hey, money's betting on the dollar finding resistance and starting to move lower. And people are getting positioned into these gold stocks because they should start a new leg up.
So that market behavior of money moving into these riskier plays like the GDXJ that people would traditionally look at as a little bit riskier, that is a sign that they could be, losing confidence in the dollar, is what you're saying, Chris?
Yeah. So more or less, precious metals and miners are kind of late stage plays. So when the stock market gets into a late stage, like its final kind of big rally, which is what I think this next big move in the stock market could be, that's when precious metals and miners actually participate. People start to get worried about the stock market, not so much the dollar. I think they actually start to get worried about the stock market and they want to move into some defensive plays. And this is when we start to see gold, silver, and the miners start to come to life. Doesn't mean they're going to rally right away, the same as the stock market. But they're losing some confidence. They want to get into some defensive plays. They expect gold to move up, and if they expect gold to move up, they want to get into the best kind of play around it, which are the miners. In terms of the dollar, I don't know if traders are worried too much about what the dollar is doing when they're trading gold miners. I mean, it's nice to know what it's doing, but I think people are just getting comfortable with the stock market. I think it's breaking out, and they want to get into some leverage plays around equities that are around an asset that they love, like precious metals. Obviously, they're like held down. They should be like, much higher from where they are, especially the miners. You look at, the price of gold for what gold is right now. I mean, these things should be rocketing higher. If we go way back in time, like, back during the previous high, gold wasn't nearly the same price back over here, yet the profits are bigger now. And the companies are just crushed. Like the precious metals market is just so beat up. It does show that we're in this potential major uptrend. Eventually we could come all the way back up there. So there's lots of potential, but people this sector has just been so beat up and held down, the physical metals. It's a tough game right now, but I think that momentum is shifting.
So when you're looking at, let's say, the gold chart, for instance, Chris, are you trying to find particular chart patterns, head and shoulders patterns, things of that nature? Or are you more looking at, compounding factors like the dollar to see the behavior in that to give you an added, data point to figure out where gold is headed?
So I always just focus on the price of whatever asset or stock or commodity I'm looking at for the trade. It's nice when other things line up. And all that does is it gives you a little more confidence saying, hey, this breakout, this pattern, if, the dollar does start to break down and we're showing that gold miners are already leading the way, gold's about to break out, this could be a really big momentum shift where this might be the next big run in precious metals. If the dollar supports that, market sentiment supports that, all the better, but it doesn't change any signal for me. I still follow. If I get a trigger on the chart, I'll trade it. The question is just, are there other things supporting that move that actually give it more confidence? Maybe you could put a little more money in when you've got that potential, or be a little more aggressive at the beginning and quickly trim some profits off. So you can trade things a little differently when other things are lining up. But it doesn't change the trade. A trade to me is still a trade. You got to wait for the pattern, wait for that momentum to shift, wait for the setup, get in, and then manage that trade.
Mm-hmm. So let's move on to silver, Chris, if we could. I've been wondering recently if it really needs the monetary demand to be able to push higher, or if you think this structural supply demand story that we often hear about will start to play in here at some point.
I mean, yeah, silver's tough. I mean, I think silver's going to have a huge explosive move at some point. It's held down really, really badly. I mean, you see it just get pounded all the time with all these contracts. Craig Hemke talks about it in pretty great detail. But when you look at silver, I mean, I like silver. I think it's putting in a bottom. I think it's very close to starting another leg up. In terms of value, like where it's going next, I mean, it still has a lot of room to go here to really break out to something significant. It still needs a 20% rally to get up here. And the problem with silver is it's a very tough thing to trade. It's a lot like natural gas in a way where you get these massive pops and sharp sell-offs intraday or massive drops. It's just overall a tough trade. But you can see here on the silver chart, we're really kind of above this kind of, we're about to break through this tipping point. We're rallying up today as we're talking here. If we can get above this, more or less the $25 level, that could be the start of a very strong move right back up to 28 going forward. And I think if we start to see a big run there, there's going to be another huge demand, another run on physical metals. And when silver breaks to new highs here over the past year or the past year and a half, that is going to spark, I think, a massive movement in physical metals. People are going to try to get their metals. It's going to be crazy premiums again. And I think it might actually start to trigger, maybe the manipulation will start to get out of control, and they can't be manipulated when spreads get so big and, they're supposed to deliver and all the delivery stuff can't make it. I think silver's in for a really big storm, which is good for people who own it. I think down the road, we just need to get to above 30 and start ripping to the upside. And I think the physical demand could trigger legal actions that could cause silver to like completely unwind the shorts and all that stuff. So that's kind of what I think is brewing behind the scenes, but we do need silver to break out.
Interesting. It'll be very telling if we once that story is really revealed, right?
Yeah.
So, Chris, do you think that oil's rally will start to hurt the miners as input costs start rising and margins could shrink?
I think it will for sure. I mean, the price of fuel has gone up so high. I mean, we're paying more for fuel where I am now than we paid back when oil was at $150 a barrel. It's crazy. So that's going to definitely play a big role. I mean, fuel cost is huge in mining. I do think crude oil is getting a little long in the teeth. I'm expecting it's going to rally to about $88 or $89 a barrel. That might put some pressure on metals and miners for a little bit. If the dollar moves up a little bit closer to resistance, if oil moves up, that might be a little bit of a pullback, and it could take metals a little longer to work themselves out of this base. But once I think crude oil hits 88 or 89, I think it's going to be in for very sharp correction. And that's when I think we're going to see the tides turn for precious metals. I think a lot of things are kind of cycles, and price action is coming to an end here around end of January. There's going to be a big turnaround, I think, in the markets based on some longer term price points and cycles and things like that. So it's going to be a very exciting, I think, end of year, the last couple of months here. It's going to be a big beginning of the year next year. Huge volatility across the board, and hopefully it'll work out really well for precious metals.
Mm-hmm. So, Chris, when we're thinking about that pullback in oil, what are some of the key levels that you're looking for? Do we have any support on this chart here?
Yeah, so it has found support just recently down at the 50-day moving average, which is this blue line. It's also a level here where price rallied up and it traded sideways for 3 days before starting another leg higher. So it's definitely come down to find support. Right now, it is trading at a short-term resistance area. It's kind of broken these lows here. It's kind of stuck under that level. So we're just coming back up to there. Hopefully, it'll get some traction and start to move higher and push up towards 88, 89. If it does close below this low, which will also probably be below the 50-day moving average by that time, because it'll take several days to come down. If it was to close below, $78 a barrel, that would probably be a trend change, and we'd be actually starting to see this unwind and move lower. But when we look at like some other sectors, like the energy stocks, XOP, for example, this is natural gas and oil exploration. It's kind of like the GDXJ of the energy sector. They're breaking out to new highs, and that's a good sign. Typically, the leverage plays, the stocks go first, and then we see the commodity follow. So the energy stocks today are up 2.5%. I think they're telling us that oil wants to continue to move higher. It's going to go higher. And I think the energy sector stocks are going to have a really strong pop here if crude can pop and start to head towards 88, 89. I think the energy sector stocks are going to have a very sharp blow-off move where we're going to see huge appreciation within a few trading sessions. I think it'll be short-lived, but we're in this exhaustion phase where I think we're going to see this final push up in these stocks, and it could be pretty big.
Mm-hmm. So, Chris, we've heard that copper can be a barometer for the world's economy. Do you still find this to be the case? And are we going to see a continuation of higher commodity prices across the board?
I think we're in for high commodity prices for a while. When we take a look at the chart of copper, I mean, it's been trading sideways for several months. It's off those lows, but the copper stocks are actually looking pretty good. They put in a base. They're starting to move higher. They kind of showed that about a week or so ago. They had a nice bullish price action. Copper's trying to put in a bottom right here. Overall, though, I mean, all the input costs are just so high right now. I think we're stuck with high costs of materials, and it's going to take a long time to work itself out of the system. Like, we're not even caught up with the slowdown of COVID. I mean, things almost in some regards are actually getting worse with the sea freight. All those things just getting backed up. I mean, you look at the railway stocks. I mean, they are going absolutely ballistic because everybody wants to just send stuff on railways to avoid freight when possible. So there's a lot of shuffling still going on. All that shuffling is causing elevated prices for materials. I think we're still in elevated pricing for another year or two, easily, I think. I'm hoping it'll slowly start to fizzle and come down a bit, but we're going to be paying through the nose for materials, I think, for quite a while, for the world to catch up and demand to, start to diminish, I think, a little bit here.
Mm-hmm. So how does this rise in commodities play into the inflation narrative for you, Chris? You were just mentioning, the input costs of everything going up. Are we headed for anything but a transitory inflationary environment, in your opinion?
Yeah, I mean, I think prices are going to stay up. I think they'll come down in a little bit, but I think overall we've seen such a huge move that they're never going to come back down anywhere close to where we were like 2 years ago. Overall, I think we're going to see. You look at the air flights right now. In most cases, it seems are pretty darn high, and they've got fewer people, fewer flights, and the prices are pretty high. I think overall, everything now is several notches more expensive, and they're always going to be more expensive for travel, for shipping. Unfortunately, COVID just slapped on a lot of expenses, and it's just like anything else. Once somebody starts charging a lot for something, and even if they start getting it in cheaper, they don't really want to start really dropping the price too often. So unfortunately, we had such a big jump. All of our living expenses are going to be super high. And it's definitely going to affect people's lifestyles. I mean, especially those retirement individuals on fixed income. I mean, this has been terrible. A lot of things have gone up 20 to 50%, in some cases 100%, just for general living supplies and transportation. So it's changing people's lives, and it's here to stay, unfortunately, I think.
Mm-hmm. So, Chris, I've heard you say that any pullback on news that goes against the trend is typically short-lived. So can you explain this to us and give us maybe an example of it?
Sure. Yeah. So an example of it, let's see here. I don't think I have an example I could pull up off the top of my head, but more or less the way it works is when we get some type of news event, whether it's for an individual stock, whether it's some type of economic data, and we see a really strong pop in the price of a commodity or stock, that is usually just everyone chasing the news and driving the price up. They all want to get involved. It sounds amazing. They drive the price up, and it's just typical supply and demand. There's going to be a lot of buyers typically on that news if it's good news, and there won't be that many sellers, which is why we see a strong jump in price. But eventually that fizzles out, and all those people, it loses momentum. And a lot of those people who chase the prices up, they're very emotional traders. And when it starts to stall out and come down, they start to panic, and they all exit roughly around the same time and create this really sharp drop. And so it's just like what we saw with the silver miners. We saw it with silver last year with the big kind of pop in silver. It became headline news. We saw everything gap up huge the next day. It got driven up in pre-market trading. As soon as it opened, it only pushed a little bit higher, huge volume. Everyone bought at the high, and then silver just completely collapsed, and it's never come back. And that's just a news-driven event, really. When you get masses moving in one direction, they just push things super far, really quick, and it just fizzles right out. And usually they're almost always given back within a few days. So it's just the way the markets move.
Interesting. Perfect. Chris, is there anything else you'd like to mention here before we wrap up?
I think we pretty much covered it all. The only thing I would mention would be actually, if I pull the chart up real quick, the stock market's had this really strong run recently. I mean, if you look at this run, if we zoom back a little bit, every time we've had a strong run, we're always followed by a really quick pullback. We had one over here. We had a sharp pullback here, another one here and here. And if you look at the size of this run that we've had in the last month and a half, it kind of dwarfs all of these other rallies that we've seen before we've gone into a 2 or 3% correction. So as excited and as bullish as I am, and we talked about how everything's now in a bull market mode, this market is in dire need of a pullback, and it's most likely going to have a 1 to 3% correction. And it'll probably be just like one of these, very quick and short-lived. It'll be 3 or 4 days, and it'll be a waterfall type sell-off, enough to make everybody panic and eject out of their trades. It's just a typical bull market buck, trying to buck everyone out of the trend before it reverses. So I think everyone needs to understand that this market is ready for one of these precipitous quick pullbacks. And it's not something I think to get worried about. If anything, it should be an opportunity, but just be aware, like we could see that drop very quickly. And it could definitely dramatically pull individual, especially small cap stocks down. A 2-3% pullback in the SP 500 could be like an 8 or 15% correction in a small cap stock very easily. So just understand, volatility is just around the corner. It'll be short-lived, but you got to kind of be prepared for that.
So Chris, if you're looking to trade that type of movement, would you use something like a following stop to try and maximize your gains on that?
Yeah. So if you're in a short-term type of play, you'd want to use like a trailing stop. So either it trails price by a certain percentage. So as price moves up, that trailing is just kind of following it along. You could use a previous bar, a close below the previous bar or anything. Depends on what time frame you're looking at. But you definitely, if you're a short-term trader, you want to protect those gains. Now, I'm focusing on trends that are a little bigger. None of these pullbacks would have kicked us out of a trend because we're following large cycles. And so I don't think we would get kicked out of a play like that. It would be just an opportunity to add more if you have fresh capital, or to get into potentially some new leading sectors or stocks that have been performing really well. Because if you get in on them when they pull back, they always have some of the strongest rebounds and you can make some pretty good gains. So you want to protect your capital, but it'll change depending on your time frame that you're trading.
Excellent. Thanks so much for your all your insight here today, Chris. Of course, you're available at thetechnicaltraders.com and on Twitter at @thetechtraders. Anywhere else?
That's it. That's about
perfect. All right. Thanks so much, Chris.
All right. Thanks, Tom. Appreciate it.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.